Hi everyone, welcome back to another episode of our Catalyst series. This is Shaina and Stepan, and this time we will be talking about taxes.
Today we'll be covering the following important topics on the Canadian tax system: an introduction to tax in Canada and terminology, the importance of filing taxes, how to start filing taxes, how to calculate your taxes, and some helpful resources.
So first off, what is a tax?
A tax is a mandatory fee paid by individuals and corporations used to finance government activities. Simply, it is a monthly or yearly sum of money commonly expressed as a percentage individuals and companies pay the government so it can in turn finance government-provided or subsidized services. These range from our highways to healthcare to Canada's public education system. But what are the two most common types of taxes in Canada?
The first is income tax. This is a tax collected on, you guessed it, your income. Composed mostly of the money you earn from your place of employment, it is collected directly by the government, meaning there is no intermediary to collect this tax. The percentage of this tax varies depending on your income. The government publishes tax brackets, which are essentially categories with different income ranges. You will pay the percentage that is prescribed for the tax bracket your income falls in. In Canada, this system is progressive. This means that the higher your income, the higher your percentage tax rate. The lower your income, the lower the percentage tax rate. For example, in 2020, if your taxable income is $60,000, you will be taxed at 15% for the first $48,535 of taxable income, plus 20.5% of tax rate for the remainder at the federal level.
The second is sales tax, also referred to as HST, or Harmonized Sales Tax. This is a tax based on the sale of goods and services. When you buy something, you can see how much sales tax you paid on your receipt. We will go more in depth on sales tax later on in this video.
Now back to income tax. The most common type of income that gets taxed is employment income. This is the amount you receive through salary plus bonuses, tips, gratuities, and honoraria. This is what you report on your T4 slips in order to calculate your income tax and benefit return. Now you might wonder, how do you file your taxes?
When filing taxes, there are several ways to do it. You can do it online by using either certified desktop and online software products where you can fill out your taxes like NetFile and TurboTax, or a registered tax preparer to submit your tax returns for you through software like eFile. You can also do it on paper by requesting to have it mailed to you or printed out from the CRA website. The last way to do it over the phone, but this is only done through invitation, is note that you must mail in your taxes the first time you file them. But what will you need in order to file taxes?
First, you'll need your social insurance number, in addition to tax information slips that show your income given to you by your employer, such as a T4. You may also want to provide receipts to claim for credits and deductions. An example of a tax credit is a charitable contribution that can be deductible from your tax returns.
Anyone who earns income must file tax returns regardless of age. The deadline to submit your taxes is April 30th for most individuals. For example, your tax returns for 2020 tax year must be filed by April 30th, 2021. This is a blank T4 slip, also known as a statement of remuneration paid, that indicates your income, employment deductions such as CPP contributions or EI premiums, and unemployment information for the year.
As we previously mentioned, there are two different types of taxes in Canada, the first one being income tax and the second being sales tax, also known as an HST. Sales tax is usually not indicated on the price tag of a product. It is added to your checkout total when you go to the cash register and pay. The rate in Ontario is a 13% HST. The seller collects the sales tax and sends it to the CRA, so you do not need to file anything. This is charged on most purchased products and services. Certain exceptions include public transit, books, and basic groceries.
Well, if you earn more than $10,000, you are legally obligated to pay taxes. If you do not do so before the deadline, the government can take action against you, such as charging interest on what is owed to them. As a result, you end up paying more than what you had to.
You can also gain RRSP contribution room by filing taxes. The Reduction Retirement Savings Plan allows you to earn a contribution room of up to 18% of your income per year, up to a dollar limit of $27,230 for 2020. This allows you to save for the future and claim the tax deduction when it benefits you the most. As an example, if your income is $100,000 for the year, you can claim an RRSP deduction of up to $18,000. If you do so, you will only need to pay tax on the remaining $82,000. It is important to know that you actually have to set up the RRSP first and make contributions to it in order to claim the deduction.
Lastly, you can obtain a GST rebate if you are in a middle to low income family, which will offset some of the sales tax you pay. This is a quarterly tax-free payment that can provide a nice little income boost. The government will automatically determine if you qualify for this rebate. To wrap up this video, let's summarize the tax filing process.
Step 1. Collect all of your supporting documents, such as your T4 and donation slips. Step 2. Choose the software that you will be using for tax filing, such as NetFile. Remember that you must mail in your tax returns the first time you file them.
Step 3. Make sure all your personal information is up to date and correct. Things like a name change can delay your tax filing. All the names on a taxpayer's tax return must match government records. Step 4. Remember to report all of your income.
Step 5. Find out which deductions, benefits, and tax credits you can claim. This can include an RRSP deduction or tuition tax credits. Step 6. Send your return to the Canada Revenue Agency.
But that's not it. Lastly, make sure to keep all your supporting documents for at least 6 years in case the CRA selects your return for review. The CRA may ask for documents other than official receipts, such as canceled checks or bank statements as proof of any deduction or credits you claimed.
That's everything we have about taxes in Canada. For more resources on tax returns, visit the Government of Canada website. It can provide a detailed list of all the possible tax deductions, benefits, and credits, and information on free tax clinics. You can also visit simpletax.ca/calculator to obtain a quick estimation of your taxes.
We hope you enjoyed this video on taxes. If you liked this video, don't forget to give it a thumbs up and subscribe. Make sure to check out our previous videos on OSAP and credit cards. Comment below other topics you would like us to cover in the future. See you next time.